Welcome to another farmers insurance training. On this video, we'll be reviewing the proper way to compare the current term premium on a policy versus the previous policy with the renewals. So I'm gonna start by going through Sims. Every time you are working on an existing customer with farmers, you go through Sims. You find the account through there. You don't have to go through Sims, but I will explain later the reason why you want to do it through Sims. Sims is your marketing assistant if you utilize it over and over. And this helps you to increase opportunities for your agency to cross-sell. So I will be reviewing every time you open up Sims, review if this account has an email address, and verify that email address with the customers, and also verify phone numbers. Go over any additional household members that moved in, moved out of the house, so that you can keep the account updated. And here you can see a couple different phone numbers. So if you want to add a phone number, you do it through here. If this person doesn't want to receive emails, you can make those changes through there. But I'm gonna go directly to the policy. And now if they want to know why the policy increased, the first thing you want to do is go to the existing policy, open it up, and from there, once it opens up, okay, that happens sometimes, and it might close the account. And all you need to do, you instead of saying okay, just close from the X, so that a lot of times, and it takes you back to the account. So you're gonna go to the household history, and then from here you want to review. You can review changes on this policy, and but if I want to review, this is pre-renewal. So I want to click on that one, and I want to view change summary. What this will do, it will help me. Let's see if it gives me, let's see if the account opens up. Well, I'm gonna say from here you can print the format. Okay, the reason why it's doing this is because this policy is going to renew, so the system is telling me that I can print a summary, because this one hasn't had a renewal recently, so it wants to give me a summary for the future renewal. So my system is going a little slow. So I'm just gonna say, okay, I want to go back to this account, because I really want to show a renewal term to see how it looks. So these ones have been more like changes. So let me open up this one to see if it lets me view the current term with the previous. Well, it kind of does, but this one is just telling me what changes have been made. So this is a good way to know what changes have been done to the policy as well. So yeah, when someone comes in and they want to know why the policy went up or went down, you can just go through here and look at those changes, review those changes. So I'm going to click on this one to see if it opens up the previous. So this one will, the page will look something like this. It will show you what was the full 6-month term for the previous policy, and then the renewal. This is the new amount on this policy. So you can see here, well, the policy went up $149, and then you want to go and compare. You can compare each vehicle. For example, this one, this vehicle, the Dodge Stratus, was paying $727, and it went up $54. And then you can compare. Bodily injury was $65, now it's $70. Property damage was $124, now it's $26. And here you can see where it's pretty even, in all of all the coverages are pretty even. So each coverage you can explain to the customer, well, the rating of those vehicles change all the time. So this is something that the company adjusts to keep up with the changes in the market. For example, every year vehicles get rated differently. So if a vehicle, a Dodge Stratus, was reported by the government reports of that tracks the accidents in the vehicles, if they recorded many fatal accidents or many accidents on this type of vehicles, all the insurance companies get those reports. So that's why certain vehicles increase more. But if a vehicle gets moved to a safer, was reported with less accidents or less fatal accidents, these can also go down. So there are possibilities when vehicles and changes when the vehicles change was lower because of that reason. So this is a great form to show to the clients or print to them so that they can compare which vehicle went up and what coverage is the one that went up. So if, for example, comprehensive went up, and if that was a bigger difference, then you can offer them to increase the deductible amount, change from broad form. This one has broad form collision. You can explain to them, well, this vehicle has broad form collision. That means if you get into an accident, then the deductible that you have is the best deductible in a policy. That means if you only pay the deductible, the $500 deductible, if you are at fault. But if we change that deductible from broad form to standard, that will help you to lower that part of it. It's important for people to understand the difference that when they pay an insurance policy, the policy is formed by different areas, and why it goes, sometimes only the bodily injury goes up because maybe there were more losses in the bodily injury side of it and not so much on the other areas. A lot of times also, like import vehicles, if the parts to replace that vehicle increases, then the insurance company will increase on that area to keep up with the market. So that's it might take, if you notice the Dodge, the broad form collision on the Dodge, it's only $277, but look at it on the Infiniti. This vehicle is more expensive. The parts on an Infiniti are way more expensive than this vehicle. That this is an imported vehicle, and this is a domestic vehicle. So the parts on this vehicle will be cheaper than an imported vehicle. So those factors are important to know, to keep in mind when you are comparing why one vehicle it's different than another one. And the other, so that's how you can go and explain to someone and give them comparables. That's where you can go and see why the premium is different from the current renewal to the next one, and give them a full analysis of those changes. This ends. Well, once you do that, you can just end that or close it. Oh, this one, because the internet went down when I had it open. But that ends the. I also, now that I'm here, I want to go over. I also want to cover another area before I leave, because I think going over the coverages, we did touch a little bit on it, but I want to go over a little deeper. So when you're explaining to a customer, you know what are the coverages inside an auto policy. And I'm going to go back into it real quick and just go over that real quick. So we have Farmers and we have Bristol West. I'm just going to utilize the Farmers policy. So I'm going to go to the coverages screen real quick. Bodily injury. This is the coverage that protects when the passenger. Well, if the policyholder injures another, causes an accident, and the passengers on the other vehicle get injured, this is the coverage that will cover that. Property damage. It's if you hit a electric pole, if you crash in a house or a building, any vehicle, any type of property that you damage, it's $100,000 outside of Michigan, and it's $1 million inside of Michigan. This uninsured motorist, this one is the protection that covers the passengers in your vehicle. And also, if somebody that doesn't have insurance on their vehicle hits you, then this is the protection that will apply to, that will cover the medical expenses for your passengers. Personal injury protection, this is the deductible. So if you get into an accident and you have to go to the hospital, the most that will come out of your pocket is $500. Everything above $500 will be paid by the company. Up to $1 million if you have another health insurance, like on this one. If this policy has health medical insurance, this means that this policyholder has medical insurance through their another form of health insurance through their employer. When you choose this gives them a discount, but then the auto insurance, it's only liable to pay up to $1 million. If we are your primary health insurance, let's say you don't have any other insurance, clients can choose to have, even if they have medical insurance, they don't have to we don't have to add it. We need to give them the option of, if we add we add your other health insurance provider as the primary health insurance provider in case of an accident, and if you get into an accident, and if that health insurance provider doesn't cover anything, then Farmers will cover up to $1 million only. But if they are not, they have health insurance through work, but they decide to have Farmers or our companies as their primary provider, then if they get into an auto accident, then the company will cover unlimited. So yes, they do get a discount, but then they only have up to $1 million of coverage. So that's the main difference. But the most that will come out of their pocket, that deductible that they have. I won't say the most. I will say that deductible they have is $500. So then the personal injury protection, and you can also click in there and you can read through that. Coverage pays for property damage to another person, legally parked car, or other non-vehicular property damage up to $1 million. This is the one that I was explaining, that it's $1 million inside of Michigan, 100,000 outside of Michigan, and that will tell you right there. So that even if you're not sure, you can just click comprehensive, covers the insured vehicle for physical damage arising from perils other than collision. And so that means if they glass breakage, if somebody scratches their car keys, their car, vandalizes the car, steals the car, burns the car, if another vehicle hits them, that's not covered through this. This vehicle it's in storage. The only protection, the only coverage that it has is comprehensive. If this vehicle is parked and another vehicle hits this car, it doesn't have protection, because the protection that covers any damages caused by another vehicle, it's collision. Either we have different types of collisions. This one is the one that covers the physical damage to the car. This one, if you have this protection, this deductible, you're gonna pay that deductible regardless if you are at fault or not. But if somebody hits you, let's say that you have this deductible, and if this car has that deductible, and you know who hit you, somebody else hit you, and you have their information, then you still need to pay the $500 deductible when you get the vehicle repaired. And then you can go and submit a kind of like a mini tort claim with the other insurance company to get those $500 back. That's what that means.
What about a reindeer?
Our reindeer.
That you're driving a reindeer comes and hits your car.
Yeah, if a deer hits your, if you hit a deer, that's a comprehensive. That deductible covers that. And so now, so these ones have, this is an another coverage that you can add to the policy. You can read through it as well. Towing, all the vehicles with farmers, we add towing because, I mean, it's not, we want to make sure, even if they have like PL and PD only, we want to make sure all the vehicles have the towing collision, the towing coverage. And so these are the rental reimbursement and additional. Towing covers a reasonable up to $150 to get a flat tire changed. Not the tire. Farmers won't pay for the tire, but if someone needs to come out and change your tire, bring you gas if you run out of gas. If your vehicle needs to be towed to that, then they cover up to $150.
But how many miles are
$150. That's the most, regardless of the miles.
Okay.
So if you need to tow your vehicle across the nation, the most you'll get coverage is $150. So yeah, so it's not by miles, but by amount. Yeah. So then this is the deductible. Well, this is a coverage that we never use because this coverage pays collision damage to the insured car without deductible or subject to the selected deductible only if the operator of the vehicle is not at fault. So if we have this deductible on this policy, if the driver is at fault, the company doesn't pay anything to repair that vehicle. So our agency standard is never to use that deductible. And broad form is the best deductible you have. You only pay if you are at fault. If you're not at fault, then the company is the one who goes after the $500 with the other insurance company. You just don't pay in that upfront. That's the biggest difference. Yes?
If somebody is driving my car and that person has insurance with a different agency, but for that day, let's say I had a headache, I couldn't drive, they drove for me, they got into an accident, and I have full coverage.
Yes.
My own company covers for my own car, or
Yes.
that person's company?
Full coverage, it's in the vehicle, regardless of who is driving.
Okay.
It doesn't follow the driver, it follows the vehicle.
Okay.
Yes. So then again, these are the if the policyholders have insurance with on their employer or their own private insurance, you can then you can say yes to these two, and that provides them that puts farmers as a secondary health insurance provider or medical the medical coverage provider. That's what that is. So with that, this ends this training, and I will see you guys on the next training.